Good evening, guys, and welcome to today's Technical Tuesday. In this Technical Tuesday, I'm going to be going over time and price, the importance of trading within a certain time zone, and how that could basically lead to more explosive setups. And what I mean by that is, some of you in the group have been sharing your trade ideas with me personally and via the Discord. But one thing they're sort of struggling with, or individuals are struggling with, is how to find them explosive movements, regardless if that would be bullish or bearish, dependent on the bias and currency pair. But all in all, how to find that explosive momentum within trading a currency pair. And I believe that is an important factor that needs to be taken into consideration, as you don't really want to be sitting in a trade that's basically consolidating for a large period of time, and it's constantly floating red and blue. And what I mean by that is constantly floating from profit to break even to a little bit of loss, back to break even, then profit, as those types of sort of trades arguably are quite indecisive, and sometimes that's just purely due to time and price. So without further ado, let's get into this video. So firstly, in order for me to get a strict bias on, forget time for this moment, we're just focusing on price. So in order for me to get an overall bias on price on that specific currency pair, I would always base my analysis on the daily. Yes, the monthly and weekly are a bigger time frame, and to a certain extent it's good to look at those time frames, but to get my daily bias, I'll always try to build a story on the daily time frame. So as we can see on Euro USD, just putting on the daily annotations. So again, we do have this institutional candle as a target of mine, as I do believe later this candle is due some heavy mitigation due to how big this bodied candle is, and there's minimal wick on each side, which means a lot of orders are contained just within this candle here in order to take out these relative equal highs, and ideally have that stop run and that liquidity grab in order to see lower prices on Euro USD. So this is a target for me, so I'm expecting bullish prices on Euro USD. Then I look at Euro USD and I say, okay, where has price reacted off previously, and what is structure sort of telling me? So again, structure is telling me we are making lower lows, lower highs, lower lows, lower highs, lower lows, arguably a new lower high. But where have we reacted off previously? This daily sponsor candle, the last down candle before that very bullish impulsive move. And again, trading in one of these time zones will allow you to swing your positions and possibly hold for a week or two or three. And that's basically how I catch those sort of major moves, is I trade with the trend. So I'm still holding a position on a specific currency pair, but upon me holding that position, I'm looking for intraday opportunities on that specific currency pair as well. So for example, if I did take a long on this daily sponsor candle, due to me knowing that the daily sponsor candle holds more weight than any intraday time frame, for example 1 hour, 30 minute, 15 minute, etc., I know I can swing my position ideally for a week or two. So again, we've had 1, 2, 3, 4, 5, 6, 7, arguably 8 daily consecutive candles, which is basically leading to about a week and a half considering trading days, and the markets are not open on the weekend. So yeah, looking at about a week and a half, and yeah, we've just been sort of ranging for the past 1, 2, 3, 4 days in a contraction range. So we could actually see another impulsive move to the upside, but not calling a sort of top and bottom just yet. I would like to trade with the trend, and at the moment we are seeing bearishness in the overall trend, lower low, lower high, lower low, lower high. We have swept this trend line liquidity. So would we get an actual sweep, in the sense we take out this prior engineered swing high here and then come and mitigate with that candle, or will we ultimately sell off, as we've seen on the smaller time frame, which I'll go into a sweep of buy side liquidity and ultimately look like we are selling off. But nevertheless, this is a video on how to exactly gain structural bias from an intraday perspective, and then obviously utilize that in sync with time and price. So on the daily time frame, I'm bullish due to me explaining the target and a sponsor candle that we've reacted upon, and also we've taken out this sell side liquidity here. Again, this prior engineered low that contained relative equal lows just above it. So yeah, that is a strong confluence for some bullish momentum. Then I'll scale it into the 4-hour time frame to give me an overview, and basically this feeds my daily bias, in the sense that if I'm seeing a similar bias on the 4-hour time frame and daily time frame, as in this in sync, my confluence for that sort of daily bias heading into the next week, or weeks ahead, will still remain bullish. So yeah, that's just basically a sort of simple way of explaining it. But then again, we see I don't use the daily annotations for my 4-hour analysis. That's where some people go wrong. The 4-hour time frame tells me a whole different story than what the daily time frame is saying. So again, we had this premium and discount range. I wanted to see price reach a premium level in order for us to sell off, and which we have got that. And I've explained this for about 2 to 3 weeks now, explaining how we could be reaching up to a premium pricing on the 4-hour time frame and sweep this trendline liquidity and come into that 4-hour area of interest. We have come into that 4-hour area of interest to the T, and I believe we just spiked above it in this candle here. So again, I did explain this on the previous weekly outlooks. If you did get an entry on Euro USD today, very well done. We may actually see lower prices towards this 4-hour area of interest and then look to go long again. But nevertheless, let's just say we have a bullish bias, and this was the point where price reacted off that daily sponsor candle. If I just put on the daily annotations now, so again, yeah, we literally wicked into that daily sponsor candle and had a bullish bias. So again, let's say upon this wick, upon this wick into the daily sponsor candle, we're basically favoring a bullish bias now. And again, we're not calling tops and bottoms. So let's say this whole sort of move has played out, and if I just put on the daily separator, so again, this is the indicator I use, FXN week and day separate Sunday default. I don't think this information is necessary. It's more so just this FXN week and day separator. So this is what I use to separate the days, as you can see, Monday, Tuesday, Wednesday, Thursday, Friday, and upon a new week starting, we do have this thick grey line. So it's good in the sense it differentiates every single week and also every single day of the trading week. But nevertheless, upon trading an intraday time frame, 4-hour isn't really the intraday time frame. I'll say the sort of intraday time frame that I look at from a daily perspective is the hourly time frame, as sometimes what you could do is, dependent on the hourly bias, you could look at the hourly bias and then scale into a 5-minute time frame as if that was your so-called daily and hourly, if that makes sense. So you're basically, from an intraday perspective, using the hourly time frame as your daily and possibly the 5-minute as your sort of hourly, and taking entries upon that. So yeah, that's a cool little thing I've figured out, and it's worth back testing. But nevertheless, I would basically then combine my 4-hour and 1-hour annotations. So if we just actually back test what's going on here. Now let me drop onto an intraday time frame. Just clear up some of this mess here. So again, this is where we actually went long, and I look at previously what sort of happened from a structural point of view and possible areas of interest that I'm looking at. So again, for this area of interest, I believe, yeah, it was off this institutional candle here, and we have to reference both of these candles. The last down candle before that up move that ideally swept this sort of buy side liquidity here and took out this prior engineered high. So I know this candle had weight to it, because it was ideally the last down candle before that move, and upon reaching that level, price tapped our entry, had a small bit of drawdown, but again, this was a 7 pip to stop. You can't really go long, you can't really go wrong, sorry, but the bias was long, and then we had that break in market structure. Now let's say you're a bit more conservative, and I'm going to turn my annotations off, and I sort of just want to focus on right now time and price. So the main rules I use for time and price, if I'm trading on sort of volatile markets that contains sort of the US dollar, and the main sort of pairs I trade anyways is the ones I go over in the weekly breakdowns. And yeah, some of them do have a reaction in Asia to a certain extent, but most of them are active during New York and London. And I'm basically going to give you Pacific time zones that I trade within London and New York. So London, I trade 7 a.m. to 10 a.m. and New York, I trade 12 p.m. to 3 p.m. So these are my main times that I'm looking to get into a trade. If it's a London setup, I'm trading between 7 a.m. to 10 a.m. and if it's a New York setup, I'm trading between 12 p.m. and 3 p.m. And again, this is UK time, which I believe is GMT. So through backtesting and etc., I feel these time zones here give me the most explosive setup. And what I mean by that is straight away when we're sort of trading within these time zones, we go right away into profit. So yeah, a good way to backtest this is putting on this indicator and then scaling into an intraday time frame. So just sort of referring back to the hourly just for a second, as the hourly basically gives me an overall illustration on where price is looking to go next. So again, looking at the hourly time frame, let's just say this entry we didn't capitalize on, and we sort of were more conservative in the sense we were waiting for a reaction of this area here. I would monitor price within this region, and again, as sort of seen within this analysis here, we had that break in market structure. Now again, this basically is illustrated. This candle has now officially been mitigated with. Upon a mitigation, banks have now entered long on Euro USD. So what I could then do is again wait for a market break in market structure and a possible pullback into either a sponsor candle or an institutional candle. So again, scaling into a 15-minute time frame, or you could even go down to the 5-minute time frame to refine your sort of entry to the T. But again, you can see it clear on the 15-minute time frame. And just drawing out them time zones again. I've drawn the London one out here. So that's 7 a.m. to 10 a.m. here. Again, we didn't see that much price action, but what tends to happen is London is building orders in order for it to sort of offload in New York, if that makes sense. So upon a contraction range form in London, which this is basically a contraction range, which this is basically something we see in Asia, the market just moving sideways and it's fluctuating between, maybe 15 to 30 pips, not done much at all. But upon that break in market structure, we could have sort of, again, looked to go long upon that sort of session here, where price and time would have met our criteria there. To the T. Let me just change this red so you can understand a differentiation between the two sessions. So again, upon meeting our area of interest there, could have looked to go long, and again a pullback, it wouldn't have been valid from my perspective, in the sense that I wouldn't really look to take a trade after we have that sort of break of the New York time. So my New York time again is 12 to 3 p.m. and after that I'm not really looking to get into a trade regarding a USD sort of pair or anything that reacts from the New York session perspective. And again, the reason that is because upon the close of that time frame, the market tends to go into consolidation and contraction, because after that range we're heading towards 5, 6, 7, and by the time you know it, sort of we're in that contraction range again. So just looking at the next day, favoring that bullish bias as seen on the hourly and 4 hour. What do we have here? Just remove this daily annotations here. Looking at the 4 hour to see if there was any sort of annotations for that day. Nope. So again, we have that bullish bias. What do we have here? Relative equal lows. And where does that impulsive move come from? London. And 10 a.m. right bang in the middle of London. And you could have caught that entry nice. And just like we had here, we had that explosive momentum come to fruition in New York. We had that explosive momentum come into the market on in London, that Pacific time zone in the London session. Upon sweeping them relative equal lows, had that last down candle before the up move. Didn't really get a mitigation to a certain extent. Price just flew. But if you did sort of want to get into this trade, you could have actually got in from the mean threshold of that imbalance. But again, that would have been a long shot and quite a risky trade in the sense that we did have this last down candle before that move. But nevertheless, the main sort of session it reacted off, it was London. I'm just scaling in here, looking at the hourly time frame, seeing if it's showing anything. So again, within this region here, we were in a contraction range, and what I was basically eyeing up was a sweep of this buy side liquidity here, these relative equal highs here, and this prior engineered high here. And we got that sweep of that buy side liquidity, and then I was waiting for a break in market structure. Now within these 2 days, I'll just be observing price. I wouldn't really be looking to trade as such, just be monitoring price. And again, upon sweeping those relative equal highs, notice how these lows stayed intact. So yeah, that was just something I was eyeing up. So yeah, going on to the next day, drawing out our Pacific time zones. 7 there to 10. Just getting into a 5-minute time frame so you can see a bit more clearly. This loads. Here it is. So again, just looking for sort of price to, again, firstly show its hand, and secondly tell a bit of a story in the sense that ultimately from that sort of daily open, we've had that sell-off. Upon forming that sell-off, we've had that retracement where to take out these relative equal highs here and arguably to mitigate with this last down candle before that move. So I know the business over here has now been sort of done, and upon this sort of small pullback that took out these relative equal highs here, and it looks like this candle has been mitigated by this candle. So again, as mentioned on the weekly outlook, how sort of wicks can contain small sponsor candles within them, and that happened during the London. And sort of if you missed that opportunity there, I believe you could have capitalized on a New York short. Again, this would be a counter trend trade unless you sort of had a long entry from the bottom there. But yeah, this would have been our New York entry upon a pullback and sort of these relative equal lows to be swept. So yeah, and how I basically got that bias for the counter trend entry was because this buy side liquidity had been swept, and I was awaiting a break in market structure, and upon getting that break in market structure, this would have been the more favorable entry, as this was the real low that gave us that break in market structure. But from our intraday time frame, we've swept buy side liquidity and ultimately looking to offload that liquidity that had been gained. Scaling back into an hourly time frame just to see what the sort of bigger picture was showing us. There it is. So again, we start a new week now, and this is currently coming into the current trading week. This was a bank holiday, so we didn't really see any movement as such, but just noticed today's price action here. Didn't actually capitalize on this short opportunity here. As we can see, the overall bias was bullish. But we did actually capitalize on the NZD USD opportunity, which is currently running, I believe it's about 70-80 pips right now, but nevertheless just scaling into the Pacific sessions. Seven to 10, that's London. Didn't really show much as such, but if I just actually bring this down here, so again you could have capitalized on a possible long of this sponsor candle here if your overall bias was long, as we are sort of making higher highs, higher lows, higher highs, higher lows. So again, trading with the trend, and just in that session there we had that impulsive move up, but again, where did the impulsive move come after London? Straight from the get-go of New York, literally at 12:15, and we've sold off viciously ever since. So yeah, that's just a bit about time and price. Let's see if we can sort of spot it on another currency pair. Here are a couple more examples that I've sort of laid out regarding time and price, and it's just a bit quicker that I sort of draw it out beforehand and then sort of go through it as, yeah, the first bit of the video. I was sort of drawing it out and then simultaneously trying to speak, but nevertheless, just explaining on a recent pair, we took a trade on NZD USD. Again, the London move here, we didn't actually see that much of bullish momentum to a certain extent, but if we actually look at the overall structural play, it was bearish. So if we actually sort of drag this up just a tad, so I believe over here, I'll just move this along. So there, yeah, during the sort of London timing and that Pacific timing, 7 to 10 a.m., we did see that impulsive momentum down. And upon New York, not New York open necessarily, coming towards the sort of New York close, etc., we did see that rapid bullish momentum that ideally broke this market structure high and sort of shifted momentum in a way, and which basically set the catalyst towards bullish prices for next week. So again, we saw something similar on the next trading day, which I believe in this case was the next trading week. During London, we saw that impulsive sell-off, and during New York, again, it was not impulsive, but we did see that bullish momentum up. And again, you could have hedged your position here, as again, this is a very valid sponsor candle, the last down candle before the impulsive move up. It ideally has a small gap there as well, so not only has price rebalanced with inefficiency there, it's also mitigated with a sponsor candle, and we've had that sort of stop loss hunt there. So it's always good seeing that sort of stop loss hunt signature when mitigating with a Pacific institutional candle or sponsor candle. But nevertheless, we did have that reaction during that sort of New York time. And again, our recent trade we took, this being 7 a.m. to move that across, that should be 10 a.m. there. Notice how during this time here, it was the real catalyst towards that impulsive move down, and we literally caught this from the top. So just looking at sort of the pips, so again, yeah, 70 pips give or take, and we may just see a small retracement up, possibly tomorrow during one of these, tomorrow during the London timing, and upon this retracement up, we could actually look for a re-entry, but I'd only recommend a re-entry if you're already short, as if we get stopped on that re-entry, you already have the existing shorts in play. Another example is on GBP USD. Again, this works very well with GBP USD, and just looking at the prior 3 days of trading. So again, this was a Friday. Normally we see Friday as a manipulative day, but when you have these time zones in mind and a Pacific bias, again, I think we reacted on the day of a sponsor candle on the bigger time frames, but nevertheless, this was the London timings. What we're basically monitoring is how price reacts of these certain time zones. London timings here, again, this could have been the catalyst towards that bullish momentum. If you're a bit more conservative, we wait for that breaking market structure. Market structure has broken from these 1, 2, 3 bullish impulsive candles. Delete that for a second. And upon breaking market structure, we wait for a pullback in where during this New York time zone, 12 to 3 p.m. and that comes right in the middle / central time of that New York zone. And yeah, you could look to go long possibly off this institutional candle here, but yeah, that would have been a favorable trade. That in itself, just in that session, would have gave you a 70 pip move. And if you did decide to hold from a sort of swing perspective into the next week, etc., you know, you could be looking at a very favorable move. You know, that's arguably nearly a 200 pip move. So yeah, just scaling in to a bit more scenarios. Again, this was a bank holiday, I believe, so there was minimal movement, but nevertheless, if you do actually scale in and see where the majority of movement occurred on GBP USD on the bank holiday, it was during these sessions. So again, we had that impulsive move present during the London timing here, 7 to 10. And again, New York, we had that not impulsive, but we did have that bullish correction move that swept this buy side liquidity from 12 to 3. So again, and there's another rule set in the sense that London normally creates the high or high/low of the day, and New York is normally a continuation of that. So if you're not available during one session, the other is valid to trade. And also vice versa, but no, we normally do see a trend continuation during New York, but nevertheless, if the opportunity does present itself, you can always hedge your positions within those specific time zones. And just scaling into the last entry we saw today, again, we saw that sell-off present during London, price coming to that sort of specific time zone. Again, a small fluctuation of orders. Just see how long this took. So again, you would have been in consolidation for 2 hours, so that was ideally not the best entry, but just looking at how we reacted upon New York, literally about 5 minutes, and you would have been straight into profit, and you could have used this institutional candle as an entry for a possible sell-off. But again, you got to consider the bigger time frames and your technical analysis. This was just a pure video on how time and price matches, and you know, the specific times to look for / to be trading in. So I hope that video helped with clarity in factoring out different times / not valid times to take trades on specific currency pairs, and I hope it gave you a more refined viewpoint on you know, when to scale in, when to not scale in, when to basically ignore price, you know, as a complete absence, in the sense that if it's not in my trading time, why would I be looking to take a trade on that specific currency pair, or even put a limit in, as you don't want that limit activating in Asia, and then we see some Asia manipulative movements, such as Asia highs gets raided, Asia low gets raided, and our stop is somewhere in between, as firstly, we can't monitor price, and secondly, that's just not what we want to see. So I would always recommend you wait for the next trading day, and more specifically the next trading session, and then scale in with these time zones. Once again, I hope you enjoyed this video. If you do have any feedback, drop me a message, and yeah, let's continue to smash the rest of the trading week. Thank you for watching, and I hope you have a good night.